Hello fellow intelligent investors, my name is René Salman and today I want to discuss how intelligent investors can review quarterly earnings results. And what I will do in this video is I will present a step-by-step guide to decode and read quarterly earnings reports. I will outline which other documents you should take a look at too, and I will show you why it is important to have a close look at the financial statements, so the actual numbers, but that in addition to that, investors also need to take into account qualitative factors in order to identify potential risks to your investment thesis. So without further ado, let's get started.
Have you ever wondered how you can make your hard-earned money work for you? Have you ever dreamed of building generational wealth and leaving a legacy? My name is René Salman and I'll teach you how you can manage and invest your money with confidence, a long-term vision, and without losing your mind. Join me on my journey of intelligent investing and learn how smart people can compound their money effectively and accumulate wealth.
Alright fellow investors, so maybe first of all we need to quickly define what an earnings report actually is. Well, an earnings report is a means for a company to report its financial results for a specific period to the public. And obviously, as investors, we want to use these reports to gain insight into how well a company is doing fundamentally, how well an enterprise is run by the management, and whether the company is currently facing any headwinds or enjoying secular tailwinds. And generally speaking, one can distinguish between quarterly reports, so-called 10Qs, that are released 3 times a year, and an annual report, a so-called 10K, that's obviously only released once per year when the fiscal year of a firm ends. And what's important to note here is that unlike 10Ks, 10Qs are unaudited. So the results have not been verified by an external accounting firm. And of course, companies listed on US stock exchanges file these reports with the SEC. So that's the Securities and Exchange Commission. Now obviously there are many other topics that we could discuss in the context of this video, such as the typical structure of an earnings report or maybe the 3 types of financial statements and their components. But these topics deserve their own video, I think, and I won't dive into these subjects right here. But what I do need to stress here is that when I review the performance of a company I own or a stock that I'm interested in, I do not only look at the actual 10Q or 10K, but in addition to that, there are 3 other sources that I think are worth examining as well. One is a press release that firms usually publish along with their earnings report in order to highlight specific elements of their 10Q or 10K. And this press release usually contains just a few paragraphs of information and often a few quotes of the CEO or other executives in order to stress certain developments of the business or maybe the industry as a whole, aspects that might be of interest to their investors. And another document worth looking at is the slide deck or presentation deck most companies also publish along with their press release. And again, a company will most likely stress the financial highlights of that reporting period and prepare graphs and charts to highlight the development of certain areas of the business or maybe to stress some KPIs, so that's key performance indicators. And then lastly, a third source worth looking at is the earnings call, which is essentially a phone conference call between the management of a public company and analysts, investors, and the media. And the representatives of these interest groups, they of course ask questions related to the company's financial results during the given reporting period. Okay. So let me share a step-by-step guide on how one can approach all of these documents, how to review and decipher earnings reports. I mean, it can seem quite overwhelming at first, but actually it is quite simple. I think you don't need to be a professional analyst to get that job done. And the idea that professional equity analysts know more than you do is not necessarily true. You just need financial literacy, and I will hope this video will actually help you to become more financially literate. So give me a thumbs up and leave a comment if you benefit from my content, because I actually spend a lot of time creating my videos, and you could do me a massive favor here if you just quickly hit the like button right now and subscribe to the channel. Thanks. And let me use the e-commerce marketplace Etsy as an example for my step-by-step guide. So the very first step would actually be to find the newest report in the current financial statements. So to do that, we want to head to Edgar, which is basically the database and search tool of the SEC website. So just Google SEC Edgar and you will find it. If you now open Edgar, all you need to do is type in the company name and then click on the suggested link. And now on the right hand side, you want to click on the annual reports and quarterly reports tab. Choose the latest filing and voila, there you have your most recent earnings report. As you can see here, Etsy's latest earnings report is actually the firm's 10K, which is great because the financials have been audited, and generally speaking, a 10K filing offers a greater level of detail. To quickly jump to the financial statements of that earnings report, just hit Ctrl F to use the find feature of your computer or the browser and search for the term consolidated statements. You will quickly find the income statement, the cash flow statement, as well as the balance sheet. Next, you want to evaluate the current performance of the business and compare the current financial results to past numbers. So what I will do here is I will open another tab and head to morningstar.com. And then I type in Etsy's ticker again in the search bar, which is easy to remember because you guessed it, Etsy's ticker is Etsy. Then I hit the tab Key Ratios, click on Full Key Ratios Data, and as you can see, Morningstar provides a very nicely organized overview of the most important financial data related to Etsy's business. So obviously we now need to evaluate the current financial results to Etsy's past results. And I usually look at what I call the big four first. So that's revenue, operating income, earnings per share. So those three are all income statement items. And finally, free cash flow, which is an item you can find on a company's cash flow statement. And now obviously I will keep it fairly simple here, but what you basically want to do is check whether the big four are growing. And maybe just on a side note, generally speaking, free cash flow tends to be a little more volatile than the income statement items. So if your investment thesis is based on growth assumptions, obviously you want to see business growth. And how much growth you need to see in order for your investment thesis to be intact obviously depends on your original investment thesis. Now let's turn to Etsy to illustrate this step with a real example and take a look at Etsy's financial results. And we will take a look at the income statement in particular. Well, what we can see here is that the company already provides quite a nice overview of the last 3 fiscal years. And obviously this already helps you to come up with a ballpark estimate of Etsy's revenue and operating income growth. And Etsy's growth is just outright impressive. In 2020, the firm was able to grow its top line, so revenue, by more than 100% compared to its last fiscal year. Now, based on the numbers you find in the income statement, you obviously could do the calculations yourself. But the nice thing about Morningstar is that they do the math for you. And their data also allows you to take a longer term view as you have access to 10 years worth of financial data. So if you just scroll down the page that we just opened, then you can choose the tab Growth, and voila, Morningstar provides both year-over-year growth of the most important metrics, but also multi-year average growth rates, which also comes in quite handy. And if you thought Etsy's revenue growth was impressive, just consider the growth rates in operating income and free cash flow. Maybe just on a side note here, I usually focus on year-over-year growth, so that's short YOY, which compares the quarter of one year, such as the firm's first quarter of 2021, to the same quarter of the previous year, so the first quarter of 2020. And I usually place more emphasis on year-over-year growth than on quarter-over-quarter growth or quarter-on-quarter growth, which measures a company's growth from the current quarter, such as Q1 of 2021, to the previous quarter, so that would be Q4 of 2020. And I prefer the year-over-year comparison because I think generally speaking, most business operations are affected by the time of the year, and therefore seasonal factors can have an effect on the interpretation of financial data and financial results. And this obviously leads to periodic fluctuations of a firm's earnings. And just to give you an example here, during the winter month, so say November and December, there's a high demand for toys and electronics, of course, because Christmas is approaching. And therefore we can assume that if we analyze the performance of a toy or a gaming company, we will notice strong seasonality. Now you might be wondering whether I compare the actual quarterly financial results to analysts' estimates. And the answer is quite simple. No, I don't. I don't give a damn about analysts' expectations. Now, as we are still discussing the big four, so revenue, operating income, free cash flow, and earnings per share, let's briefly address profit margins, because margins are ratios that you should also consider when you review quarterly financial results. And I would say, broadly speaking, I like to see stable and increasing margins over time. And if we turn to Etsy again, based on the massive growth the business enjoyed in terms of operating income and free cash flow, of course the margins have been increasing. And in fact, I would say that the development of Etsy's margins over the past 3, 4, 5 years has been what investors dream of. Now, if on the other hand, the margins of a company go down, that would not necessarily bother me in the short term, but I would definitely need to understand why that is the case. For instance, I might wonder whether the company is investing quite heavily into the future. All right, next I want to consider how the number of shares outstanding developed. You can find this figure on Morningstar, but also on the income statement of the firm. And again, if we look at Etsy as our example here, we can see that Etsy actually increased the number of shares outstanding by around 11 million, so roughly 8%, which is not insignificant, and certainly something investors should acknowledge. But considering that, Etsy's company is in massive growth mode, this is not something that really worries me all too much. And then maybe finally, you want to take a look at a firm's balance sheet. And what's important to keep in mind is that when analyzing the balance sheet, you are basically looking at a snapshot in time. So of course you want to compare a firm's current assets which it can quickly turn into cash, to its liabilities. Corporate debt grows significantly over the course of the last year or quarter. What might be helpful here is to consider some classic debt ratios, such as debt to free cash flow or debt to equity. But in the case of Etsy, we don't really have to do that, as we can quickly find out that the current assets already cover total liabilities, and thus Etsy's debt situation is not something I as an investor am overly worried about. Now, before I move on to the next step, what I will usually do is I look at the management's discussion and analysis of financial condition and results of operations section of the 10Q or 10K. Based on qualitative and quantitative measures, the management team will outline here its view on the business performance, explain the direction in which the business is heading, and maybe mention future goals and projects, and elaborate how the business will address any challenges it is facing right now. Essentially, I would say management presents us a story behind the numbers, because the actual numbers we can find in the financial statements, that's only one side of the equation. And the story behind the numbers is maybe, in many cases, the other side, which can be much more important. All right, so I think if you are already familiar with this specific business, its main risks and its competitors, the main components of a quarterly's earnings or annual report that are of interest to you are certainly the income statement, the balance sheet, and the statement of cash flows. And as I said, maybe the management's discussion section. As I pointed out in the beginning of the video, another important document to consider is a firm's press release, as well as the shareholder presentation that they release along with the press release, as these two documents reveal more about the aforementioned story behind the numbers. So what you want to do here is simply Google the company's name plus investor relations, or simply IR. And then you should quickly be able to maneuver to the investor relation website of the company you are tracking. So you can simply open two new tabs here and open both the press release as well as the investor presentation. It's hard to come up with general rules when it comes to interpreting these two documents. Maybe first and foremost, just very carefully read both documents. Thus, the management maybe stress industry or company-specific KPIs. So as we said, that's key performance indicators that are maybe allowing you as an investor to develop a better understanding of the business and where it is at right now. Does the management hint at future opportunities, maybe new markets or new products, or do they articulate where they see major risks the company might be facing? Do they maybe admit mistakes that they have made in the reporting period, which would actually be something positive, as it would display that management is communicating openly and honestly with the business's shareholders and treating shareholders like partners. I would say that both files or both documents can be helpful to develop a better qualitative understanding of the business, and again, where the business might be in 5 or 10 years from now. And again, just to use Etsy as an example here, let me show you what I found noteworthy in their most recent Q4 documents. So maybe first of all, there will be a lot of irrelevant details in both the press release as well as the presentation. Keep in mind that as investors, we mainly care about the long-term vision of management and the long-term development of the enterprise. So even though it's not incredibly relevant, what I found interesting in Etsy's documents was that Etsy's management wants to continue its marketing spending and actually allocate more money towards top of the funnel marketing, which basically refers to efforts that are focused on increasing brand awareness. Moreover, management stressed that they want to improve the brand awareness in other countries, as Etsy is no longer just a US-centered business, but operating internationally and doing so successfully. Etsy is actually expanding to other foreign markets and increasing its market share in already established non-US markets. And this obviously offers tremendous growth opportunities. As of now, Etsy's international gross merchandise sales already represents 41% of total GMS, so gross merchandise sales. And obviously I don't want to analyze Etsy's company too much here, but maybe just to provide one more example here of what investors could look at or look for when they are reading the PR and the presentation. The fact that the number of habitual buyers on Etsy's platform increased by 157% is also excellent news to investors. Etsy defines habitual buyers as buyers who have spent $200 or more and made purchases on 6 or more days in the previous 12 months. And obviously this development massively increases the lifetime customer value of Etsy's customers. Alright, so the next step would be to either listen to the earnings call or read the transcript of that call. Or of course you can do both. And if you want to listen to the call, I highly recommend checking out my video on an earnings call app that can be incredibly useful here. If, however, you prefer reading the actual transcript, then I recommend Seeking Alpha. Simply search for the company on Seeking Alpha and then hit the earnings tab and click on transcripts. And once you have found the most recent transcript, what you want to do is pretty much the same as what you did when checking the press release and the investor presentation. Simply read through the transcript, of course listen to the call, and try to find some interesting data points. So let me once again illustrate what I mean here with Etsy's example. In fact, I will not start with the most recent Q4 call, but actually the Q3 call, because towards the end of that call, Josh Silverman, who's the CEO of Etsy, actually pitched the company. I think the passage that I'm about to show you truly helps investors to develop a better understanding of Etsy's competitive advantage. So feel free to pause the video and read through this passage to understand what I mean here. And just to give you another example, the following two passages from both the Q3 and Q4 calls highlight Etsy's focus on improving customers' search experience and to personalize the user experience. In search and discovery, our big tracks of work involve making it easier to find just the right thing, even when you don't have the right words to describe it, and helping to surprise and inspire people, being a place where buyers can come and browse, lean back and find inspiration. And this focus on search is also highlighted by this slide in the investor presentation. And maybe lastly, the fact that management identified India as another core target market during their Q4 call would be another positive takeaway from that most recent conference call. And I hope you get the idea of what to look for and pay attention to in these conference calls. Okay, fellow investors, stay with me, we're almost done. Lastly, I want to briefly have a look at management's guidance. Essentially, guidance is a company's own best guess regarding next quarter's earnings. And in Etsy's case, we can find that piece of information in both the press release as well as in their investor presentation. And generally speaking, I like companies that have a long history of under-promising, but then actually over-delivering. Just take a look at Brian Farol's beautiful visualization of this concept. Well, if that's the case, then the firm's guidance can actually be considered something like a base case scenario with lots of room to the upside. But then again, how you treat these guidance figures obviously depends on management's past estimates and if they were able to fulfill their estimates. Now, the last step, which is probably the most time consuming, is to actually read the entire earnings report filed with the SEC. If everything seems to be doing fabulously regarding the business fundamentals, you might actually skip this step. But especially if there seems to be some kind of underlying issues with the company, I certainly recommend reading the entire report in order to try to figure out what's going on in the business and whether the issue can be fixed or whether the long-term prospects of the business are somewhat impaired. All right, so what's the bottom line here? Well, I wholeheartedly believe that investing is mainly about just sitting there and doing nothing most of the time, like 99% of the time. And that's why usually a single quarter result and a short-term earnings miss is not a reason to immediately sell a stock, just like maybe a spectacular quarter. It's not necessarily a reason to buy a stock. And generally speaking, business change takes time, and it can only encourage you to take a longer term view, as I pointed out in my video on the concepts of diamond hands and paper hands. Taking a longer term view can actually give you an enormous edge in the market and can also be referred to as time arbitrage. And I really like what Ian Kessel recently tweeted. He wrote that as an investor, you need to give your positions a little bit of room to disappoint you, and a lot of room to exceed your expectations. Nonetheless, you want to track the businesses you own very carefully and spot a trend of deteriorating business fundamentals early on. So, I hope one big takeaway for you here is that you don't have to be a professional stock analyst to read and understand earnings reports. Obviously, there are many thousands of publicly traded companies that are releasing their earnings reports each quarter, and no individual can look at all of them. So instead, I suggest that you first and foremost concentrate on the companies that you already own. And in addition to that, you might want to track the firms that you are maybe newly interested in, or firms that are already on your wish list, but that aren't available at attractive prices yet. And just to wrap it up here, if you want to get an idea of what other investors look at when they analyze quarterly earnings results, I highly recommend the Twitter threads of Mostly Borrowed Ideas, in which he goes through the earnings of companies such as Google, Facebook, Etsy, or Lululemon, and highlights his key takeaways. And for those that have watched this video until the end, I wanted to provide a visual summary of all of the steps that I mentioned in this video, and that I think investors should go through when they review earnings results. Feel free to take a screenshot of it and store it on your device. And that should already be it for today. May your finances and investments prosper. Good luck.